but today we're talking about the exciting subject of creating borrower demand through social media. So a little bit of backstory about how this came around. So we work with mortgage professionals around the country. We have conversations with them every day. And we actually had a few of them that introduced us to Casey at Loans.io. So Casey's team is responsible for generating thousands of mortgage leads for loan officers every single month. And basically the narrative of how this partnership came to be was, hey, like I'm working with a lot of these leads, I'm talking to them, but I can't get them some of them pre-approved yet. And so I think that there's opportunity for a partnership between Loans.io and Uqual, whereas Loans.io is really good at generating pipeline, giving loan officers people to speak with. And then for the people that the loan officers aren't able to close, we've invested in millions of dollars of technology to help get those borrowers from A, unapprovable, to B, approvable, even if those letters don't really line up. So let's talk about what we're going to go over today before I hand it off to Casey. So first, we're going to go over your opportunity to generate a consistent flow of buyers through video marketing. We know right now that we need people to talk to. And we also know that the number one trend in the marketing world is consistently video marketing. Next, we're going to go over your playbook for how to effectively use video marketing as a mortgage professional. We're going to give you like a speed run on this stuff. This could be a 5-day masterclass, but we're going to go through it really quickly. We're going to show you like where to fish if this is the type of activity that you're going to push forward with. And then we're going to talk about how to maximize social media leads to get to close loans. So you actually get leads from social media, you get leads from video marketing. What do you say? How do you get those people to actually turn into pre-approvals? We'll cover the difference between paid and organic social media. So paid really being, we're able to put money in and we're able to get leads immediately. Whereas organic is more of a long-term time investment where you do a lot of work now and over time it pays dividends down the road. And really it's like me being head of marketing at Uqual and being in the marketing space for a long time now, most professional companies have a split or a blend between paid and organic. As a loan officer, if you don't have a big team yet, you're probably going to want to really focus on one and then start the other as well. So we'll talk about the difference between those two. And then finally, we'll go over next steps. So with that, I'm going to hand you off to Casey Gibson, who's here. I've had an amazing time getting to build this webinar with him. He's such a positive guy and he's just so in depth, and he's actually changed a lot of the ways that I've thought about video marketing, which has been super exciting for me as well. So off to you, Casey. Oh, wait, before we go there, I'm supposed to introduce Uqual because this is sponsored by Uqual. And what's a webinar without a sponsorship message in the first 5 minutes, right? So basically, as I said earlier, Loans.io, really good at generating traffic, getting you to speak to potential borrowers. What we do is we've created a fintech platform. We've invested millions of dollars, and we've created this platform that says, based off of where you are now, declined, or unable to get an offer approved, or unable to purchase a home because you're currently priced out due to high interest rates, we say, hey, here are the things that you specifically should do using artificial intelligence. So basically we say, okay, here's your DTI, here's your down payment, here's your credit. Here's what you need to do in order to get those metrics where they need to be to get into a home. And so that's basically what we do. But at the end of this presentation, I'll give you an option of if you want to talk to us. We make a really good duo with Loans.io because they create a ton of volume for you. You talk to a ton of people. Not everyone's ready to go yet. We're the ones that get them ready to go. So now with that, off to Casey.
I almost started talking with it muted, which would have been funny after what we were talking about. But my name's Casey, guys. I'm Director of Marketing at Loans.io. Today we're going to be, so Josh and I actually had to have a call yesterday about keeping me on track because I will talk about this stuff like forever. So during the call, if I pause for a second or if I go off track and then like make a quick turn, it's because I've caught myself and I'm trying to get back on track because I don't want to keep you guys here for like 5 hours. But yeah, so why social media marketing, or why video social media marketing? Consumers are spending a lot more time on social media. I mean, this isn't any new news. 2.5 hours a day on social media. 89% of we're going to be talking a lot about YouTube today and a little bit about TikTok as well. 89% of households with an annual income of more than $100,000 a year use Instagram, and 40% use TikTok. And you can actually segment those people out. And then there's a huge untapped opportunities to create videos in the mortgage industry, because not a lot of people, one, not a lot of people do it in general. And then two, there's not a lot of people who do it that do it well. So, just by going a little extra mile when you're making your video content, you can really make a difference for your business long term.
So,
So
putting some, because I realized I didn't put a title on this one, but we wanted to show you like, hey, this stuff works. And I was like, hey, Casey, like, prove it. And you sent me these. What are these?
Well, I sent you a lot of these, but I know why you didn't put them all on there. I just like blasted him with it. So, but these are just a CSV of leads that we generated for one of our clients. And we get about 3 to 5. Now, this is on the paid side. We're going to be talking a lot about the organic side of marketing today, where you don't pay money, you pay with time. But, and this is just a text that we had from one of our clients.
What do you need for me to get the ad spend up? I mean, I usually, if I want to spend more money, it means I'm seeing results. So that's a good thing. All right, pushing forward. What's the difference between paid versus organic? Because we've already alluded to it a few times.
Yeah, so there's some big differences. One, the money is the cost when you're doing paid, and time is the cost when you're doing organic, right? Organic it takes time to think of the content, make the content, get it out, create the strategy, all that stuff, right? And then money, it's, you just got to have the money. Another one is,
I want to call out really quickly, because I realize even fundamentally behind that is paid social media is when you put money towards advertisements, and advertisements show up on people's feeds to attract them to want to get pre-approval for a loan, right? You're putting money in and then there's an advertisement shown. Organic is when you yourself have your own channel, right? And that's when you're posting content and you're trying to be found by potential borrowers who are looking to buy a home later down the road, or looking to buy a home now. And so the difference here is paid, you're putting money in to put advertisements up. Organic is like you have your own YouTube channel. Sorry, Casey, I just wanted to make sure I was super clear on that.
Yeah, and that's a good point. And it's not an argument of which one. Like, they both have their advantages, and they both actually work. They should be working together. Another factor is time to value. So quick is paid social media is going to be quick. It's money in, money out. Organic is going to be a longer term investment, but it pays dividends, right? So you create that organic content, especially on YouTube, and once you put the time in to make it, month after month after month, year after year, that video is going to be out doing work for you. Quality of leads. So paid social media, you'll get a lot higher volume. I'd say another word for lower quality is just people at different stages of the process, right? You could have somebody literally at the very beginning of like, oh, I want to buy a house. And then, you'll get some people on the other end of the spectrum who want to go right now, and then everything in between. Organic, usually when those people reach out, they're pretty much ready to go. You could think of organic content as creating another referral partner, but except this one's digital, and it'll just go out there forever and ever, and you don't have to keep buying it coffee.
And what always impressed me when, Casey, we were having our initial talks about this, is you're saying when leads come in from organic, a lot of times they've watched a bunch of your videos, and at this point they almost see you as a celebrity. They're like, holy crap, it's Casey Gibson. Like, I've seen him in all his videos and now he's talking to me, and they get a little bit giddy. Is that still the case?
Yeah, it's on the real estate side and on the mortgage side, it blows my head up a little bit, which is nice. I need it every now and then. But like you said, whenever people reach out on your organic, usually they've watched a lot of your stuff. To you, you've never met this person before. They're brand new to you, but to them, they know you so well, like, and trust you so much, and they won't go shopping as much, and they'll give you, a lot of times in real estate, like, they would just send me a list of everything they wanted as soon as they reached out. Before I even responded to them, they would just be like, we've been binge watching your videos, we're wanting to move in, in 3 months, we're looking for 450,000, da 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 da. Got kids, got a dog, like all this stuff. So, but yeah, what you said. Sorry, my brain stopped for a second. But another factor, the technical skills required. So, I mean, if you do paid yourself, there are a lot of technical skills. There's a lot of trial and error and money to be invested to learn the stuff. That's where somebody like us comes in. Like you still, obviously pay, but we've done all that testing and tweaking and stuff for you, and continue to do so. Now with organic, there's some technical skills involved. Video editing, advanced social media, videography, SEO. But like I said before, there's such a big opportunity for LOs right now that you don't even have to be good at that stuff. Like if you saw my first YouTube video, you would just laugh. It sucked so bad. And I was in real estate, the real estate video market. Like there's more real estate agents doing video than there are loan officers. But training, right? So pretty quick to get started with paid if you're doing it with, hiring somebody to do it. Organic is a multi-day masterclass. That's why we have you guys here for 3 days at minimum. So
it's 45 minutes, Casey.
Okay.
Anyway, and money and time, two of our most valuable resources, obviously. The good news is like right now we have a lot of time to start producing content, unless your phone's blowing up. If your phone is blowing up, like congratulations, you are a unicorn and you might be the only loan officer that we're talking to that's in that situation, unless they're currently doing a paid strategy. But if you have time, now's the time to learn. I put this stuff in red because it does take a lot more focus and commitment, and there is a lot of trial and error per what Casey was saying, but now's the time to just start, and you get a little bit better every day. And the good news is when you do organic now, you build this content, as the market starts to heat up, like the videos are still there, and people that are just starting to research in a better market, they're going to your videos, they're learning from you. And so it has that long-term shelf life. So definitely don't be too intimidated by the organic social media, and know like there's a lot of long-term investment that you're going to get out of it.
Now we're going to talk about YouTube. This is where I have to watch myself because I could talk days about YouTube. It's my favorite platform by far, especially for organic. But do you want to go over this, Josh?
Yeah, sure. So I actually bought a house back in April, and I was moving from out of state, and I needed to learn more about, I actually didn't need to learn about different types of loans because I am head of marketing at a loan readiness company, but I did need to learn about the different neighborhoods. And so what I did is I looked up different neighborhoods in the city that I was moving into, which was Portland. Needed to obviously be really careful with everything going on here, like what's a good area, what's a bad area. Needed to understand like what was the dynamic. And so I went on YouTube, right? And I got educated from different realtors that were on YouTube. And there's a lot of people that are also researching specifically around how to buy a home as a first-time buyer, what's the best way to refinance. And there's a lot of opportunity for loan officers to produce that type of content. So when consumers are looking, before they even talk to a realtor, before they even talk to a bank, a lot of times like the buyer's journey is completely changed. People are doing a lot of research before they're making a call, because people oftentimes don't like talking on the phone yet. And so if they're doing their research online, they're going on Google. And if you type in first time home buyer, and then you type in Oregon or Texas, it's going to prioritize showing video content on YouTube up at the top. And if you're actually taking those places and you're the one that's educating them, that means they're watching your videos. That means that you're building a relationship with them, just like we covered on that last slide, so that when they're ready, they're going to be calling you because they're the one that they learned from. Who you learn from is who you go back to when you want to actually purchase. And this has been such a major trend in the marketing world, which is content marketing and video marketing, that every single company in almost every single industry has changed their strategy to focus on this content and video marketing approach. So I talked about why, and I want to cover it because me being in the marketing industry and being agnostic of the one that's actually a YouTube expert and doing strategy personally for like major companies. Like I've done tons of Fortune 100 companies, and all of them were talking about video and content marketing. So I just wanted to make sure to communicate just how important of a strategy that is across the board right now. And now Casey is going to walk through what are the different steps for starting an organic, especially on YouTube.
Yeah. So just so you guys know, I started on YouTube, just give you a little bit of pretext so you don't think I'm just some random guy talking about this. I started on YouTube when I started as a real estate agent. And when I started as a real estate agent, I couldn't really afford to take, 2 years to build my referral base and pass out business cards because I'm in Nashville. So you guys probably know Nashville's a pretty hot market. Everybody here was a real estate agent and their mama was a real estate agent. And then the people who weren't knew somebody who was. So I needed a way because I couldn't afford to go 2 years without making any money. So my plan was to start a YouTube channel and get people that are moving here from out of state, because we were having a lot of those people who are relocating because they don't have any pre-existing relationships. So I literally went to one of those, not Home Goods, but I got some paper, some green paper, and I taped it to my wall. And I used the green screen effect in iMovie. It was so awful. It was the worst video ever. And I actually still have the video. It sucks, but it was still generating me leads. That's the thing. But over time, so I did that for about a year and I just got better and better and better at it. And then we started our marketing agency, my business partner and I, and I did the same. Like I just did the same thing. So I started a YouTube channel for it, Modern Mortgage Marketing, and similar effect, right? You have loan officers reaching out. We generated a lot of business off of it, not just leads, but actual business. So I know it works, and I know what works. And there's a huge opportunity right now for this. So just wanted to preface with that, because if you don't know that it works, then you might not do it. But first step is to build your channel. So that's pretty much just kind of making the channel. Some show potential borrowers why they should work with you when they are ready. Let your prospects go deeper with other videos. So YouTube's huge on creating binge sessions, and that's whenever you will make big money from YouTube. And you don't need a lot of subscribers or views. You just need a few people reaching out to you, closing loans, and that's it.
And we're going to send out this presentation after the actual webinar. And we actually have some resources here. So we're not going to walk through like, here's how you go through the steps of building a YouTube channel specifically. But there's a link that will show you how to do that. And then we've also linked to a popular LO channel as well. So you can check out the types of content that they're putting out. So step 1, building your channel. Step 2, getting your equipment.
Yeah. And pretty much, guys, if you have a phone, and $15. So I still use this, and it was the first thing I got. It was like $15. It's a lapel mic. It's all you need. So you need good audio, you need a phone. Then as you go, like when you close your first deal from YouTube, you can invest in one of these, nice blue mics that they have right there. I still don't have one because I'm cheap and because I'm kind of lazy. I keep intending to go get one, but I still use my lapel mic. You can get the shotgun mic. Like there's different things that you can get to enhance your content, but literally if you have a phone and $15 to go buy this lapel mic, then you can start. You do not need a lot of stuff.
Yeah. Yep. And like Casey's generating thousands of leads for loan officers, not using a bunch of fancy equipment. Real quick, we had a question come in as we progress. It says, I just need to get it done. When can I start? I don't want to do it. I want someone to do it for me. So we're going to walk through, Raymond, as we get further along the video about like what you can do to just put money in and get money out. So if you're really interested in like, I just want to pay someone to take care of this stuff for me, like we're going to give you a call afterwards and we'll walk you through that. So really over the next like 20 minutes, we're going to walk through the steps of like how you can do it yourself. But if you're not interested in doing it yourself, we're also going to cover paid and what that looks like. So I would recommend that you stay on, but nonetheless, we will be giving you a call afterwards. Cool.
Yeah.
And if anyone else has any other questions coming in, feel free to just post it in the Q&A and we'll either answer it at the end or as it's coming in. So get the equipment, you've set up your channel. How do you actually figure out like what content to build, and how do you actually like, are you writing scripts? Tell me a little bit about your process here.
So there's a few different content strategies that you can go with. Being a loan officer, you can, because you can do deals anywhere in the state, right? So you could cover what you start out with though. I'll start by saying this: what you start out with, you need to stick to kind of that bucket type of content for at least 20 to 30 videos. You don't want to start out doing different types, but once you get to about 20 or 30 videos, then you can start to expand into the other types. So what I mean by that is, say that you start, what I would do if I was in your shoes, and we may actually do this. That's a whole other story, but um, I would start local. So I would do kind of like I did. I just started with Nashville, and I hammered Nashville, like different Nashville videos. The reason is Nashville is one of, like, and I was a real estate agent, so I was pretty local. But even as if I was a loan officer, I would have done it, because Nashville is one of the main areas that people are moving to, and even if they're moving to areas around Nashville, they still look it up. So once I did about 20 to 30 videos on Nashville, like my channel was like the Nashville channel. It showed up everywhere. Then I started covering the areas around it. So Brentwood, Hendersonville, Franklin, all these areas, right? Then I covered Tennessee as a whole. And whenever I did that, that Tennessee video just took off. But if I would have started with that, then it wouldn't have, because here's, as you're building your videos, you're building authority with YouTube. Yeah, YouTube's learning who your audience is, because when you first post your video, YouTube has no idea who your audience is. That's why it takes a while for it to get going. So you need to stay very narrow so YouTube can more easily figure out who your audience is. Your audience is people wanting to purchase a home. And then once you start kind of getting authority in that topic, then I like to think of it as a funnel, but instead of going from like the big end down, like you're starting on the narrow end, and then you're going up and up and up, if that makes sense. So you're going broad. So you're starting like Nashville, areas around Nashville, Middle Tennessee, right? And then you could even go national if you wanted to. But
Something that I was thinking about while you were saying this is, like, for a realtor, it's really easy to say like living in Brooklyn, right? Because it's really like realtor focused content. But I'm thinking like how that could apply maybe to a loan officer specifically is, maybe you're putting out content around first time home buyer, and then you're putting the city name, right? And you're figuring out like what are the localized specific things that a potential borrower would be researching in relationship to loan officers. Another strategy is maybe you're actually partnering, like once you start building content, another part of going up that funnel, like partner with different realtors that are putting out content as well. And that's a really good way of being able to exchange audiences, because if a realtor is doing a really good job at promoting a specific area and they're talking a lot about moving into a townhome in Brooklyn or whatever it is, you're then putting out content on first time home buying or the mortgage process in New York, there's opportunity to do collaboration there as well.
yeah, that's a good point. So to expand on that, as a loan officer, you kind of have a little bit more variety that you could do than a real estate agent. Now, a real estate agent's target customer, like that they're marketing to, and a mortgage loan officer target customer, they're almost the same person, right? So you can learn actually a lot from watching different channels that are successful that real estate agents are doing, because they're doing it more than loan officers. So you have an advantage really, because you can cover like the stuff specific to mortgage related to the area, but also you can go out and do the type of stuff they're doing, living in this neighborhood, that neighborhood, stuff like that. Because if they're researching the neighborhoods, then they're probably interested in moving there. So yeah, huge opportunity. Oh, and the bottom, almost forgot. Some different tools to help with your content strategy. So the three best ones, vidIQ is the most expensive. It's really good though. It's like $50 a month. TubeBuddy's cheaper. It's like, I think, $12 to $15 a month. And it's really good as well. That's what I started with. And then the YouTube search bar or Google Trends, you start typing in the YouTube search bar. So if I start typing, you know, Nashville and like look at what auto populates, those are the things that are getting searched the most. So you want to look for things that are getting searched a lot, but have don't have a lot of content already covering it, or has content that you can improve upon. Or if all the content that shows up is older, right, you can take that spot because YouTube values relevancy. So, or not relevancy, what's the word
Relevancy.
for
Or
relevancy? Is that it for newer stuff?
uh, more recent.
Yeah,
Yep.
recency.
Recency and relevancy. They're looking at both of them. I mean, sometimes you'll go on Google and you'll be like, why is it showing an article that's from 2003? And then it's like, oh, as a marketer, that's actually an opportunity, because if you build good content that's in 2022 or 2023, like chances are you're going to be able to push that 2003 content down.
Yeah, exactly. All right.
All right.
So
So
you go.
yeah, I was just gonna say, like, building that content calendar and then actually recording it. I always find that creating the videos requires, the hardest part of it is actually just getting started. So how do you recommend that our loan officer partners, they want to start recording videos? How do they muster like the willpower? What's the best strategy for them to do it in order to do it the most effectively?
Okay. Yeah. So I just want to say before I answer that we're talking a lot about YouTube, but this same content strategy can be applied to Instagram Reels, to if you want to start a TikTok account, all that stuff. I like YouTube more because it's more like, it's just better for long term. If I start talking about it, I'll talk for 30 minutes. But to answer your question, the best way, batch record. So you list, say, 3 videos that you want to record, right? So we could do, I'll give examples of when I started: cost of living in Nashville, pros and cons of living in Nashville, and I can't remember what a third one was. I don't know. Let's say neighborhood tour of downtown Nashville, right? You don't have to do that, but say that. Then under those titles, I make like a few bullet points of what I'm going to talk about, and then you just take your phone, prop it up, plug your lapel mic in, and you just talk. That's it. Like, and batch recording, you do them all 3 at the same time. And then what you do, so say you're posting a video a week, you have 3 weeks of videos recorded and you only had to do it once, right? So you could do that. If you're doing a weekly video, do 4 videos all at once. Boom, it's 1 day out of the month. You have a month worth of content. Don't worry about anything. People stress so much about what they're saying in the video or how they look. Just talk and just keep talking, and then take it, put it in iMovie, which is a free software. If you have a Mac, there's free video editors. You can even use Canva, and you just clip out the uhs and the buts and anything that is excessive. You can turn a 15-minute of me rambling for 15 minutes down to like 8 minutes of good content. So you don't have to listen to all the uhs and the buts and the ums.
So something that I like, Casey, you blew my mind with about doing videos, and it's completely changed my video game, was I used to record through, and anytime I made a mistake, I basically started the whole video over. And so this is just the most tactical feedback that I can give. But Casey was like, no, when you make a mistake, you just pause for a second and then you restart the sentence. And I'm like, well, won't that like be really choppy? Because it's like cutting from me talking then to me talking in a, like, potentially, like, my head's moved in a potential different spot and it's obvious that I did a cut. And he said, with how like ADD people are these days, to have things like jump around actually creates momentum in the video. And so it's completely changed how I do video, because I talk and I make a mistake, restart the sentence and start going again. And I can make video so much faster. And it's true, it actually does make it more engaging because it creates that progression.
Yeah, doing the cuts, like the way that the consumer preference of content is these days. Well, TikTok is just destroying everybody's brains, but we use it to our advantage. But yeah, the cuts, like they actually feel more natural, right? If I want you, next time you're on YouTube, if you come across a video that has no cuts versus a video with cuts, just like notice that it's just like, it's weird. It just drags on, it's like, I need some cuts. I go faster, you know what I'm saying? So yeah, it looks natural. You just cut it. You can even, like, when you pause, like you just said, when you throw it in a video editor, you can see the wavelengths on the bottom. So if you see a big pause, you're like, okay, that's cut out. You don't even need to listen to it. You're just like, cut that out. But yeah, that's good. I'm glad you brought that up.
Awesome. So the final step here, I think the final step, post and share your content.
Okay.
What are the
Yeah.
best
So
practices for actually posting your content? It seems easy. You just upload the video, right?
yeah, pretty much. So you just upload it, right? Don't overthink it right now. Just, record it and upload it, and then you'll improve as you go. If you try to figure out everything, if you're going to try to do it perfect on your first time, you're never going to do it. You're just going to be thinking about doing it forever. So just post it. It's probably gonna be better than mine, but it's probably still going to suck. Relative to what you're going to be doing 10 videos from now, so on. Now, with YouTube specifically, so you make the video. I'm going to slow down right here because this is important. So if you decide to do this, this is a big mistake people make. I don't want you to make it. So you make the video, you post it. On YouTube, you don't share the URL to that video anywhere. Other than, there's a few exceptions, but I would almost say don't do it just out of precaution. But because here's the thing. So YouTube will push your videos out to more people if it figures out who your audience is. So if you take that URL and you share it on your Instagram and on your Facebook, and you have all your friends and your family click because, hey, what's Josh doing? So they click and they watch like 20 seconds. They're like, okay, yeah, good for him. And they like it. And then they hop off. YouTube will see that because they take audience retention is a big part of what determines if a video goes out. So and I'm trying to say this quick without like going too long, but if they click and then leave after 20 seconds, YouTube's algorithm is going to say, this video is not good. We're not going to push it out to anybody. Right. So, and then it will suggest another, because those people weren't really interested in purchasing a home or looking in an area or, a mortgage. Right. So it's just going to confuse it and the video is going to die. But if you post it and leave it, it'll be slower. It won't get a lot of views at first, but then all of a sudden it'll start getting the right audience. And YouTube will push that video out to more and more people. Now, the only times that you can share the URL to your YouTube video is in a very specific like group or case, or if somebody asks a question that your video answers perfectly. Basically, you don't want a lot of people clicking and clicking off. I would prefer you just not ever share the URL. But if you do want to, those are like, you got to be really careful. Now, what you can do is take the video and post it on other platforms. Just don't post the URL to YouTube. You don't want people going from outside of YouTube to in. And there are differing views on this. Some people think that it's beneficial. I've tried it and it kind of killed some videos for me, and I saw a downtrend. So, and logistically, I think it's better just to let YouTube do its thing, right? It's going to find the audience. The people that want to watch it are going to click it. They're going to watch it. The YouTube's going to be like, okay, let's find more of those people, more of those people, more of those people. But yeah, take the video, and then you can even take clips of that video. Like 1 8-12-minute video could be 6 clips that you could post on Instagram Reels over a month.
Yeah, I wonder if we're going to be doing that with this webinar, cutting it down to 10 different videos that we give to you. All right.
That's a good idea. We should do that.
We should do it. All right. So we got 10 minutes left, 9 minutes left if we're being technical. Let's talk a little bit about paid media. And to reiterate for anyone that wasn't on the call earlier, organic is when you yourself are posting content on YouTube. Paid is usually when you're paying an advertising agency to do advertisements for attracting potential borrowers. And really the output is they're giving you a list of people that you can call. And so the difference here is like, hey, you can spend X amount per month and get leads over to you, every dollar in, every dollar out. That being said, when you spend that money, it's not like you're in 3 months, if you're not doing the paid media anymore, it's not like you're going to still be getting leads, but you're going to get an instant flow of people that you can talk to, compared to organic, where it's going to take trial and error and then also building it up over time. So Casey with Loans.io, which is his company, they're a paid media agency. And maybe Casey, like there's TikTok, there's Facebook, there's Instagram, there's YouTube. Why is it that your agency focuses specifically on TikTok?
Yeah. So for some reason, I always want to say something before I answer a question. If you have more time and less money, then organic's the way to go. right? But if you don't have as much time to get it started and you have like you already have some money coming in, then this is the move, and it will actually help with your referral network. So gosh, what was your question?
Yeah. So like, why do
Oh
you
yeah,
focus specifically on TikTok instead of the other platforms? And the
got it.
answers are actually right in front of you, so you don't have to look too far.
Okay, yeah. So I'll read these and then I'll like expand on them. So because I already had an answer in my head. So there's a massive volume of consumers on TikTok. Obviously, you want to put your brand in where the attention is, right? So I use this analogy with Josh the other day. I don't know why people pay thousands of dollars for billboards whenever everybody on the highway is looking at their phone anyway, right? Like put the money where the attention is. That's where people are going to see it. And then lower advertising costs, which means you get more reach, you get more leads, you get more opportunities. And then TikTok's, I think 2023 is going to be TikTok's top year. YouTube is my preferred platform for organic. And right now, because we've done paid on YouTube as well, and it does work. The biggest opportunity right now is TikTok because of the blue ocean. There's not a lot of loan officers marketing there yet. Now, since we started, there has been some more people like start, but for the most part, it's a really big blue ocean. So it's kind of like Facebook in its early days. You can get a lot for what you put in. And right now, the more opportunity, especially in this market, the more opportunities that you can get, the better. So that's why right now we are on TikTok, because we basically want to be where the biggest opportunity is. So that changes one day. We might change a little bit, because why stay with a dying platform? Like, I don't understand why. Like, if we were doing Facebook ads, I don't know why we'd still be doing Facebook ads for loan officers,
No, totally. I mean, and that's the thing, like the glory days of digital marketing was like 10 years ago on Facebook, when there wasn't every advertiser and their mom on advertising on Facebook, because for every person that's bidding on someone, like it's a competition to who can spend the most per person to get an advertisement in front of them. And so like all the advertisers, they're heavy on Facebook, Instagram, and YouTube, but they're still figuring out TikTok because it's a completely different game than they're used to. And so really, like Casey's and his team have been able to capitalize on this massive opportunity with TikTok right now. And maybe in a year or two, it'll be TikTok, it'll be shifting it to somewhere else, but going with the wind right now is the time to get on TikTok.
Yeah.
So let's talk a little bit about the anatomy of a digital lead flow. So like, what's it like to work with the digital advertising agency? How does it go from somebody like scrolling on their phone aimlessly to seeing a call to action to get pre-approved for a home? And then how does that result in a pre-approval?
Yeah. So this is the kind of the flow that we have set up. And then even if you were to do this yourself, this is what you would want to kind of resemble. And over times, we've had different iterations that we've kind of tweaked and stuff. But so borrower sees the video ad, right, to get pre-approved. The way that we do our ads is it's definitely about a mortgage, not about a list of homes or anything like that. So there's a popular campaign, like a list of homes campaign, that people use on Facebook, generates leads, but it's incongruent from what they're like, who they're talking to and about what, right? Like they're expecting a list of homes and to find out more about homes, but then they're talking about getting pre-approved. So anyway, sorry, that was one of the times I started rambling. So they see the ad, then they fill out the survey. So the way we have it set up, they answer the questions first, and then they fill out their personal information, and they actually have to type that information in, unlike say Facebook, where it's auto filled in, because the harder it is to fill out the form, less people will do it, but they'll be better quality, right? From there, we have somebody call them to confirm details, find out more, and then from there, if
real quick, Casey, what are the
yeah.
questions that you're asking in that survey? It's like, what's your estimated credit score? What are the types of things that you ask the borrowers before they even get to a loan officer?
Yeah, so there's 4 questions we always ask, and then there's 6 questions that could be asked based off of the answers to the 4. So we have logic in our form. So the main 4 questions are estimated credit score, household income, how much you have saved, and it's a range of like 0 to 5. Or we've actually started doing a little bit more on the ranges. And then the third one, employment status. So now if they answer favorably to those, we just let them, because the more questions you add, it lowers submission rates, right? So we can find out additional details on the back end if they answer like 100K plus and 700 plus. So we want those people to submit pretty quick because the platform optimizes off of those conversions. But if they answer like under 620, then all of a sudden 3 more questions pop up that ask them additional. So that does 2 things. If they do go through all those questions, you have a lot more info, and it's probably a higher quality, low quality lead because of like how much effort they put into it. But it also turns a lot of those people away from the ad because they're like, I don't have time for this. And then the people with good answers, they just go through it, boom, right? So you get those opportunities, get less of the others. That's how we do it.
Awesome. And so let me know if I have this right, Casey, because I've been working with you a while. So the borrower fills out a survey, and like we've probably tried like handing off those leads straight to LOs, but like what I think Casey you were explaining to me is like if you hand the leads off, like they need additional qualification, because just filling out that form usually isn't enough. And so you actually have a prepping agent who goes ahead and texts and call those leads to make sure, like confirm all the information that they provided, make sure they're serious about it. And then they hand the borrower off to the LO. And if they can't get a hold of them, they'll consistently email and text them. And after doing that, once they get a hold of them, then they'll work to hand them off to the LO. So if for some reason, on the other hand, though, if you're unable to actually reach that lead, you can send them back to Casey's team and they'll work to try to get a hold of them again so they can then hand them back to you again. Right? Did I butcher anything there?
No, that's pretty much
Okay.
it. Yeah. We've tested out allowing leads to book straight from the ad, and you get a lot of bookings, but you end up getting a lot of appointments that don't show. So having somebody in between when they come in and when you talk to them is really beneficial. You might be at a point to where that's you right now, or like we provide somebody for that. But even right here, so like borrower sent to LO if they're pre-approved, yes. Send a realtor, no. Send to Uqual. I would say even people that you talk to that you don't even take an application with, because like if they're not loan ready, pretty much we tell them to send them to Uqual. And then a really good strategy that one of our clients taught me is actually, so obviously you want to send your qualified leads that are pretty much ready to go to potential realtor partners. But even your lower quality leads that aren't ready right now, or people who just aren't ready right now, you can send those to brand new agents, a lot of them, and you will get brand new agents because they'll love to take any lead you can give them, and they'll follow up on your behalf. And there's a higher chance that they're going to work with you once they start producing some stuff themselves. So
yeah, it's like how you become the go-to LO. It's like you're sending them leads, like, wait, what? You're sending me leads? And you can invest in different realtors by sending them people that are ready to go, or people that are still being worked on based off of like their location in the overall funnel. The one thing that I would say, like, hey, if you can't pre-approve them now, like shoot them over to us. We'll work on your behalf using our expert coaches, using our technology. We'll help them work on their credit. We'll help them improve their DTI. We'll help them save more for a down payment. We'll look at all the different loan types based off of the information that you're providing us. And when they are ready, we'll then send them back to you so you can get that pre-approval and then ultimately route them to a realtor. So I had to give the plug on that. So right now we are a little bit over. So
sorry.
I think just for the sake of time, I'm going to give a quick summary of the section because I put it together. When you're looking for an agency, and don't be sorry, Casey, like the content was amazing. I probably should have made this an hour, so it's on me because there's just so much depth. Again, this could have been like a 3-day masterclass. Is the one thing I could say to mortgage professionals that are thinking of doing paid advertising: do not partner with an agency that is not specific in the mortgage vertical. And here's why. They're going to need to do a ton of research on how the mortgage industry works. And then they're going to do a ton of testing to figure out what works, which is going to cost you money. If you find an agency partner that's in the mortgage industry specifically, you're going to be able to find somebody that already has a formula so that when you put money in, you're automatically getting leads out at the most effective way possible. But if you have to partner with an agency that doesn't know this industry, like they're going to do the research, they're going to do a ton of tests, it's going to cost you more. So be sure to find an agency partner that's in the mortgage industry. They don't have to learn your business if they're in the mortgage industry. You don't have to pay for ad creation if they're in the mortgage industry oftentimes. They don't have to learn to optimize, and they don't have to build nurture campaigns because they've already done this for loan officers around the country and ask to see their results. How many leads are you delivering to mortgage professionals every month? Tell me about how those leads convert into homes. Give me like a client testimonial. Can I talk to one of the LOs that has been partnering with you for a while? Go for mortgage specific. Don't go for non-mortgage specific because you ultimately will burn money. And then finally, like when you get a lead, call the lead as quickly as possible. A lot of times people respond to these ads impulsively. So definitely call the lead as quickly as possible. Try to do Zoom and Google Meet because when you get face-to-face, it'll help build trust so much more than making that phone call. So when you get a hold of them, schedule some time like, hey, let's sit down on Zoom or Google, or if they're like really close to you, like maybe let's meet in person. That'll help build trust so much faster. And always know that like, hey, there's always opportunity to get referrals from the leads that you're talking to. So that's a whole nother source there. And then finally, once you actually talk to them, either route them to a realtor, route them to us. How awesome is that? So next steps, and Casey, thank you so much for this amazing content. I'm going to say the next steps, and then if anyone wants to stick around for Q&A, we do have a little bit of extra time, but I know that your time is money. And so just push through these last slides really quickly. So there's 2 different buckets here, and you could be in both. Choose your adventure. Why not both? If you want to talk with more prospective borrowers, hit up Casey at loansio.com. I'll be handing off the list of attendees over to him as well. So I believe that Casey, you might reach out. And then if you want to get more of your borrowers that you're talking to into homes, reach out to me, josh.crab@uqual.com. We have some amazing people on our team that have been helping or who have been partnering with loan officers to get borrowers into loans that couldn't previously get pre-approved. So please reach out to us as well. So with that, going through the Q&A. So we have some pretty good questions here. So this is actually going back a little bit from Corey, and you're talking about sharing content, not oversharing, and how the algorithm optimizes to the length of content. Should you post short videos so people watch to the end? Or should you be posting long videos where people might not get to the end, but they might have watched through the entire length of, say, what that short video might have been?
So on YouTube specifically, you want to make the video as long as it needs to be. So it doesn't need to be too short. It doesn't need to be longer than it needs to be. But it doesn't need to be, obviously too short. You don't want to make it short just for the sake, because what YouTube ultimately cares about is how much watch time, because what does YouTube want? They want people on their platform, right, for longer. So that's why creating binge sessions is so important. But that's also goes back to this question. If the video is so there's a click-through rate that factors into this as well, right? Because you could have a really good video that nobody clicks on. But if it's a short video, but there's alternatives where people that YouTube could present about the same topic that gets people to stay on the platform for longer, then you probably are going to lose that, right? You think of it as like a little competition. So a really good time frame to try to hit it is anywhere between I say 8 to 12, but even 6 to 10 minutes. Just make it as long as it needs to be, but don't cut too much out for the sake of making it short. Like there's videos that are 30 minutes long that do really good, because YouTube, like I said, so YouTube just cares. They want people to stay on their platform. So if you can retain people for 15 minutes and they watch it, then do it, right? But if you're just like adding fluff for 8 minutes to make the video longer, then it would be a 7-minute video or an 8-minute video, right? So yeah, I wouldn't worry too much. Just try to make it at least 6 minutes, but don't worry too much about the length. Just make sure that it's concise and there's not a lot of fluff. But adding story, here's a tip. So I almost forgot this. Add stories to your points. It'll make the video longer, and stories increase retention. So, Josh and I used a couple of stories during this. It's really engaging when you share stories, and they could be just tiny stories, right? Like, Franklin's really nice area. People love it. I was just driving through there the other day, and they're building so many stores. Boom, little story, right? Like that catches
Yep.
people's attention, and it makes your video longer. So
Yeah, it's like I talk to people every single day, and especially like people that are looking to buy a home, and they always think they need 20% down because they have that ingrained. And being able to see how they completely change, like their face lights up when they realize, wait, I don't need to put 20% down. Like based off different states programs, it can be as low as 0%, or in many cases 3 or 3.5. Like, and being able to communicate your experience as being a loan officer and keeping it personal is so important to creating that authenticity and connection. Another question, Casey, that came in, Martin, this is a good one because I think about it as well. How useful are hashtags? Do these help
they
YouTube
don't
in
matter.
finding our target audience? Don't matter? Nope.
They don't. The hashtags are only they become less and less relevant on YouTube. They're only for helping with misspellings. That's the only thing that they're used for now. What matters on YouTube is getting somebody to click on the video, getting them to watch as much as possible, and then just getting them to watch another one. So that's like the words that you put in the title and the description, they do help the like YouTube figure out what the video is about, but it's actually less than you think because the YouTube actually transcribes what you say in your video to figure out what it's about. So like you'll notice sometimes that you'll search for something and a video will pop up and it doesn't have any of the keywords in it, right? But it's ranking for that search term. It's because the content of the video answers the question. So hashtags are that they don't
What
matter.
about
Focus on
on TikTok and Instagram?
yeah, those are different. So yeah, Instagram. I'm not familiar, so I don't do a lot of stuff on Instagram. I consume it, but I don't use it for promotion. So probably get better answers from somebody else. Organic TikTok definitely matters. You can actually in the ads target people based off of which hashtags they engage with. So and it does affect the algorithm on TikTok, but YouTube it doesn't matter at all.
Awesome. That sounds great. I think those were the only questions that we came in, but they were great questions. So, hey, everyone, thanks for hopping in. Casey, thank you so much for taking time to talk to our different partners. I think next steps here. So we'll reach out to y'all, talk to you a little bit about the different offerings, both on the Loans.io side. And if we're not currently engaging with you on the Uqual side as well, we have both Ashley and Matthew who are on this line. Both of them are amazing members of the Uqual team. And we'd love to talk to you about ways, one, not only how can you generate more pipeline with Casey, but then two, what can we do to make the most of the pipeline that you currently have? They're really the only nozzles that we have right now that we can focus on. And if you're able to get the most out of both of those, then you're really able to really push through in these like ridiculous market conditions right now. So Casey, thank you so much for your time. I really enjoyed this, and everyone that stayed on, looks like most people actually stayed on for the entire time, despite it being an hour. So that's like, thank you for the really good content. I always learn so much when I talk with you, and we look forward to talking to everyone who's on the webinar.
Heck yeah. See you guys. Thanks for coming.